Good morning, everyone. We'll kick off in about 1 more minute. We're just waiting for final registrations to come through. Thank you. Good morning, everyone, and welcome to our series FinTech Fridays, brought to you by BDO Austria. In our webinar today, we'll be discussing open banking opportunity. My name is Aman, Global Leader for BDO Fintech sector and the National Financial Services Leader. Before we kick things off, I would just like quickly to draw your attention to the housekeeping slide that is currently shown on your screen. To start, you are all automatically muted, but we'll be accepting questions throughout the session, and you can submit these using the question tab. We'll try to get to as many questions as possible. However, if we can't respond to your question, we will respond after the webinar. If you are experiencing any technical difficulties, please click the support button, which is at one of the bottom tabs on your screen. And finally, this session is being recorded, and all registrants will receive a follow-up email with the slides, a link to the recording, access to register for future sessions, and the speaker contact details for all of us. The road to a CDR framework for open banking has been driven by regulatory changes, technology enablement, and consumer preference towards control of data. But is open banking an opportunity or a threat? Today on our panel, I'm very happy to welcome Jill Barry and Adam Sims. Jill Barry is the founder and chief executive officer of Adatree. She is an Australian data rights expert, helping organizations unleash the potential of open banking and the CDR through turnkey data recipient and data holder solutions. Jill is also a finalist in a number of categories for next week's FinTech Australia's The Finnies, including Emerging FinTech Leader of the Year, Female FinTech Leader of the Year, and Excellence in RegTech for Adatree. And probably even more importantly, Jill is from Buffalo. For those that don't know, I am from Buffalo. Here's my Buffalo Bills hat. And you'll see I've been sipping in my Buffalo Bills beer mug, which is serving as water for today. So welcome, Jill. I'm also joined by Adam Sims, Forensic Services Partner here at BDO. Adam has a unique background with more than 25 years of investigation and financial crime management experience. This includes practicing law and working within law enforcement, Australia's competition regulator, Big Four banking, one of Australia's largest insurance providers in private consulting. Welcome to the both of you. As you can see, we're actually in BDO today. So this is the first webinar that we've had back on site. So everyone's very happy that we're coming out of this COVID-19 experience and we've been able to meet face to face. So hopefully everyone will enjoy today. So today we're going to be taking a closer look at the CDR and how it applies to open banking, the risks and opportunities, as well as use cases more broadly, which I think you'll find very interesting. Jill, first of all, how did we get here and what's to come for open banking?
Absolutely. So I think that open banking, which is, so I'll use open banking and the consumer data right pretty interchangeably. Open banking is really just the application of the consumer data right to the banking sector. It's been a number of years in the making. First, it really started off with a review into open banking. The UK had really started implementing it a number of years ago, and Australia did their due diligence, did their homework, looked at what worked well, how to improve it, and made a number of recommendations. So we're not starting from scratch. We're learning from the UK and really improving on their open banking implementation. So so that recommendation happened in December 2017. Lots of rules went through Parliament, technical standards defined. We've been starting to test with the first 10 data recipients and the Big Four banks back from last October. So it's been a really long year for us. And then it finally went live in the 1st of July this year. So it's been a really long journey, but tons of people, organizations, regulators involved for a really thoughtful process with the consumer at the heart of it.
Okay, thanks, Joe. And so I guess, can you just explain a little bit about how your company works within the open banking scheme and how you're assisting clients?
Absolutely. So if you want to be a part of the consumer data right, there's essentially like two parts of the ecosystem. There's data holders, and those are industries, organizations who have to share data. Those are industries that are designated by the ACCC as having shared data. So it's first, right now it's banking, so it's the big four, and then all of their ADIs have to share data soon. Then later it goes to energy, telco, insurance, super. Then there's data recipients. So those are companies that want to receive data from data holders with the customer's consent. So a data recipient, that could be really any industry, any use case, any size of company. So it has a huge range of applications. So Adatree, what we do in the ecosystem is that we take something that's really complex and challenging, which is the technical standards and security standards that you have to meet if you want to be part of this ecosystem. You have to be accredited in the ecosystem and constantly meet these standards that are changing over time. So we do the heavy lifting, so companies can focus on creating great customer value propositions instead of like all the technical details of it. It'd be similar to if you're starting a bank, you'd use a core banking platform to worry about the interest calculation and in the ledger, things that really don't give you competitive advantage, so you can focus on building products.
Okay, thank you. And I think we'll talk about some of the use cases later on in the webinar. I guess from your perspective, do you think open banking seems to be off to a bit of a slow start? And I guess, probably, fintechs you would have thought would have been a big winner in this sort of space. What's your sense in terms of why there's been such a slow uptake so far here in Australia?
Absolutely. I think it's been slow and calculated really by design. So there was never going to be a ton of data recipients being accredited on day one, just because it was really close, essentially with a beta group of the first 10 data recipients. So as of yesterday, there's now 5 accredited data recipients. 3 of them were in the initial group of the first 10. So it's been slow because it's been a really slow or a small closed group of ecosystem of actually getting access to be able to test and build to it, but also there were delays because first it was supposed to be launching in July 2020, then February, and then so I think that there are just questions of, is it going to be delayed again? So we were very happy when it was not delayed again, and it actually, the ball got rolling in July.
Good. And I guess, do you think the government's doing enough in terms of awareness around CDR? They've sort of pledged another $28.5 million. Do you think they're doing enough to get the word out?
I think that right now they've been really focused on making sure that everything is off to a secure, well-tested, robust start. So have they done enough for awareness right now? No, they definitely haven't. But I actually don't think it's really important in this at this point in time. I think that basically really soon, once there start to be more accredited data recipients, once more consumers actually start to see these propositions in front of them on their on their online banking or these web portals, and they're like, what is this? I think that's when the awareness really starts. But the good part of it is that there's a consistent customer process. So if I'm at a fintech or a bank or in an insurance company, the consent process and a lot of the statements are the exact same. So it's consistency, and you have to be accredited. So are you going to have a wildly different customer experience from one company to the another? No, only in what you do with the data, but for the process, it's the same. So that gives consumers and businesses the confidence to actually share their data within this regulated ecosystem. So I don't know, I like to think that instead of telling people what it's going to actually be, like the benefits of it, that you'd actually just see propositions, you read it, you understand it, and you consent to it. The same way that no one really understands how, or a lot of people don't understand how contactless payments work with tap and go. They just understand the convenience of it. Your life is better, and in happy days, you just use it.
Yeah, and I guess I'm starting to see a few more clients start asking us the question. So I think probably we're starting to see the people starting to think about it, thinking about the accreditation process, and I know we'll talk about that in a little while. Adam, I know you're desperate to participate in the conversation. So I guess in terms of trust, if we take a flashback to pre-COVID Royal Commission findings, there was a real lack of trust with the consumers. Do you think CDR and the ability for consumers to trust the process, what's your view of that?
I hate to be here and be Captain Buzzkill, but I guess, yeah, I need to give a different perspective. I guess, look, it excites me. Open banking does excite me. I think it is frankly the adrenaline shot that the banking sector needs, the financial services sector needs. I think the real risk will be, firstly, or the real hurdle, firstly, will be trust. Yes, we're on the back of a significant, probably the most significant inquiry in Australia's history, certainly in relation to financial services. The banks have taken a hit. Any process that the banks roll out will be susceptible to question. And customers are going to be, I guess, struggling to understand how they're protected. So that'll be the first point, I suppose, in this process. The other thing, so I guess it's going to be tricky, but the other thing that really underpins this is the regulatory environment, which is probably a little unclear at the moment. I guess the ACCC are involved. They have a very good reputation. From the banking inquiry, so we'll go back to that, we've seen that the Australian regulatory environment or landscape is a bit hit and miss. ASIC and APRA, I guess, were accused by the inquiry of essentially being in bed with the banks through a soft culture of enforcement. So I guess really what will underpin that trust will be how the regulators respond. So not only the processes that are put in place, which you pointed out, but also how the regulatory environment forms around this. And I think the participation of the ACCC in particular is a good thing.
I think sort of following on from that, Adam, is, data breaches. And, there's been instances globally, of big data breaches, in the US in particular. And I guess this links a little bit into trust, but I guess in terms of, from an AML perspective, what's your view in terms of how banks can ensure to the customers that data is secure?
That's going to be hard, especially in the current environment. You mentioned the FinCEN file leak, a significant breach, and it's still evolving. I mean, it's been headlines now for a couple of weeks, and they've got some real issues. And I think the media focused initially on the banks. So the breach was around suspicious matter reporting. And the focus was, okay, the banks have reported this and they just sat on and done nothing. Well, that's not the true picture. The more significant issue, I think, in terms of what we're talking about here is the fact that the information got out to start with. And I'll go back to my point about the regulatory environment. We need to have faith, or there needs to be faith in that process. I think it's going to be implicit as part of the program, the rollout, that data protection will be key and it'll be a cornerstone of how it works. I think the other risks that we'll talk about soon around, how information will flow along the process will be more relevant. I'm not saying data breach isn't relevant, but I think it sort of goes to the heart of what we're talking about here, and it's implicit that the data will be protected.
Okay. So I guess it's now time for our sort of first polling question, and I guess as Maddie puts it up on screen, or Amy, there we go. What do you think is driving reluctance to the uptake of open banking? And I won't read all 5 different responses out, but if the participants can take a look at those 5, and I guess, Jill, before people respond, if you look at this particular question, what do you think is, from your view, what is the answer?
I think a lot of it is that companies are super busy with a lot of their other initiatives, and a lot of it is wait and see, because there's promises of all these customer and business efficiencies, and I think that they just want to see some runs on the board before really jumping into it themselves. That's for the majority of companies, but we're working with a lot of the early adopters who have the vision, believe in it, and are just jumping quickly.
Yeah,
that's my personal view.
Okay, let's see. Do we have a bit more time? Polling is closed. Okay, Adam, do you have a particular view as we're waiting for the answer to come through?
I think I touched on it before. Probably the regulatory environment underpinning this, and to the governance that needs to be put in place for organisations participating in the market.
Okay. So the responses up there, basically the regulatory framework was about sort of 36%. Obviously COVID, I think, when this was first coming out, and Julie mentioned some of the delays, I don't think anyone sort of then added on a global pandemic. So I think just in terms of, that is obviously going to slow things down. So probably not surprising that that's sort of the answer. So hopefully, I guess as we get through the back end of 2020 and things start to speed up, and obviously COVID starts to hopefully improve down here in Australia on a more perspective looking basis, then people will be looking to look at CDR more closely. So, okay. So Jill, while open banking impacts banking now, the CDR Act also calls for an economy-wide framework that will have lasting impacts across different sectors. So I think originally a lot of people think CDR, they think banking, and I know we'll touch upon this in some of your examples, but the government's also committed to apply CDR to the energy and telecommunication sectors. How do you think that that's going to impact those particular sectors?
Absolutely. So there's two sides of the impact. All the companies that can receive even more types of data, and the companies that are burdened with actually sharing it. So with sharing it, I think that it really just goes to the sentiment of what is the consumer data right. It's the idea that instead of an organization owning and holding a data about someone's energy transactions or banking transactions, it's actually the consumers. So I think that it's an economy-wide shift of mindset. So it really just thinking that, all right, well, it's actually my data, it's your data, and those companies just hold it. So now they're obliged to make it available so I can do whatever I want with it. If I want to switch easily to a better provider, if I want to get new services out of it, new insights, I think that it's really just putting power back for the consumer. So realistically, it's going to be a cost for those organizations, and it's a program of work for them to share that new type of data and to do it, with the required availability, security. But I think that's just the evolving of those new consumer data rights. For being on the other side of it, being a data recipient, that's awesome. You get to receive first all the customer account transactional data for banking, but then once you can actually receive all the energy, all the telco data, think of what their value propositions just increase in magnitude of what you can actually do. So
how do you think the bankers are taking this open banking? Because if you look at historically the bigger banks and the mutual banks, they've had very sticky customers, and no one really shifts. Now with open banking and the ability for information to be shared more broadly, what's your sense of who do you think will be impacted the most in the banking sector?
I think it's interesting, whether you're with the big four or a very small credit union, you're definitely grappling, getting your head around what does this mean for actually being able to share the data. And banks have teams of people, some of the big four have literally more than 100 people on this type of project. So it's a lot just to meet their obligations. Where the opportunity or the threat comes in is, well, you have to share it. It's if you can't beat them, join them. If you're sharing your data, that means someone else is going to receive it. It might be a fintech, it might be an insurance company, but it could be your competitor. So what can they do with that? So ultimately, how can you view this as a glass half full exercise, receive the data and use it really for customer acquisition, engagement, retention, so instead of just a negative thing.
Yeah, and I think that's going to be interesting, I think, in terms of, again, if coming from the US and coming here, I've sort of noticed the big banks have such a prominent role here, versus if I look US, there's big banks, but also there's a lot of regional banks. And so there's been a lot of consolidation in the market here since I've been here the last 20 years. And so I think this forcing banks to open up the data is going to be quite interesting to see what happens. And I do think it's going to be a great opportunity for fintechs. And again, when we get into some of the examples, I think that that's where we're going to see the potential real benefit for CDR.
Mm-hmm. Absolutely.
So why don't we move on to your report? So I think, I've had the pleasure of reading your report about 25 use cases that can be used to improve products and services and provide better experiences, for customers. And Maddie and Amy are adding the link into the chat box, and also this will be sent out, after the webinar. And I think when I read this, for the non-financial services people and non-people that have been focusing on CDR, this kind of brings to life the impact and potential of CDR. So we wanted you to have a chance to walk through a few different examples, from your thought leadership piece, just to sort of bring to life, the potential impact for CDR. So I'll hand over to you to talk a little bit about some of your examples.
Absolutely. So I think that just for context of it, we started to author this report just because, well, I'm a product developer by trade, so I always think about what problems this is solving, what are the solutions for this, and who are we solving this for? And I would get asked all the time, open banking, that's just for banks, right? Or I'm just gonna aggregate all my accounts in one place. That's the best I can do, right? Or just what's the killer use case? So it's really looking at the idea of there are so many different use cases, and just looking at if you have access to the data, and with banking data or different industries, read access, and later even going to write, being able to initiate, what can you actually do with this? What does this mean for your business and for your customers? So we came up with 25 examples and then divided them into a smoother and smarter framework, because realistically, someone in the head of operations or customer service, they're probably more concerned with the ones that are in the smoother category. So the smoother category we define as leveraging the CDR so you can digitize, make faster, cheaper, improve what you have right now for existing processes. The smarter ones, it's probably more like the head of innovation, products, really forward-looking new capabilities of how can you create this data, with this data, how can you create new data-driven insights, prompts, new capabilities for your business. So it's more like improving and new. So that's how we've really structured it. And some of them are different, or categorized, just so you can kind of figure out what problems can solve for your business. And in each of the use cases, it says, what's the problem? What's the solution? Give me an example of what this looks like, and who is this relevant for? Because it's definitely not just financial services, but we talk about, because some use cases are really broad, like customer onboarding or account switching, or even just product comparison or proactive nudges. But some of them are pretty tight and specific to organizations that would be might be payee switching. That's obviously just for banking. But we have about probably 15 different industries, and we just have a grid of, well, what we think can actually be relevant. So even from government, insurance, travel, loyalty, so well outside financial services as well. So we just have a couple slides. So just walking through 3 of them. So you can see here that this is what the report looks like. Obviously, happy to take any questions on what these use cases are, or who would actually adopt them. But the thing that they have in common is that for a use case to actually work, to be viable, is that it can't just benefit the business. So if you're oh, I'm just gonna cut onboarding costs by 90%, but realistically, a customer has to consent to share their data. So if they don't get a benefit from it, no one's gonna share their data with you at all. So it has to be customer first with this. So just going through a couple of them would be, the first one is really switching as a service. Let me go to the next slide. I think perfect. So I think that everyone can really resonate with this. You have your life to-do list, right? And it might just be I think I'm getting the best savings account or best home loan rate in the market, but I'm not really sure, and I need to go to a broker or a comparison site, and it's probably pretty low on your to-do list. You know that you could be saving money, or just trying to figure out what are the best products and services for you. So the idea of switching as a service is, if you were to consent to share your transactional data with a company, so this could be a comparison site, this could be a broker, this could be a bank, this could be a brand new organization. share your data, and then they'd analyze all these different products in the market. They learn a lot about you, about your savings, your transactions, but like how often you actually switch, and look at what you're paying for right now, and a suggestion of like what could actually suit you better. So it's the idea of, instead of you going to a site or a broker and be like, all right, I'm just gonna look at some different products, things that you might not even be qualified for. You go through the application. I think that's it, and then ultimately you might apply for products that you're going to be declined for. The idea of taking your data, looking at what products you're really suitable for, making the best recommendations. And you can say no, you can say yes, but it's just taking life admin and making it more proactive, instead of companies being reactive to be like, oh, I'm in the market for something, as opposed to being like, hey, Jill, did you know that you can get something cheaper? Click here to switch. Like, well, that's a no-brainer. Who wouldn't want that?
Yeah. I think to me, when you read through that, you start going through and thinking just some obvious life examples. I'm about to renovate my house. I need a construction loan. If I was able to just push a button and someone come back to me with my different options, rather than the somewhat painful process I've been going through, talking to different people, searching for different things, and to your point, probably not overly qualified to find the best sites to find the right information. So, to me, this is a real sort of practical example. And then if you link that a little bit into insurance, I think my mother-in-law, for example, has been with the same insurance company for 50 years. And, she got, her premiums went up, she called and got a discount. But I think if she could have clicked the button, she'd probably been able to get a cheaper insurance premium, the last 15, 20 years. So I think these are kind of the real obvious ones where I think everyone's quite busy. And I think particularly as you're starting to embark on different life's journeys, being able to get ready, available information, which are going to put you in a position to be able to capitalize on those opportunities, is quite important.
Mm-hmm. Yeah, I absolutely agree. And then I think that this will get richer over time once you can actually share your energy data, or once your basically any of your other data. Like, it would be amazing for insurance companies. They could even see a whole of wallet of, right now I would have insurance policies with 6 different companies. But if someone were to receive it and just make me a better offer for all of them, of course I'm going to consolidate. But it's the idea of someone really doing it for me.
Yeah. Yeah.
So I think that this one has a ton of legs, really. One that is probably just really relevant right now, it's the idea of credit monitoring, because traditionally lenders, banks, credit providers, they just do a credit assessment. So they look at their scorecard, they have a scorecard, and they look at, let's look at Tim's transactions and his salary over time. Well, COVID's really disrupted a whole lot of it. You don't know, like, just because a business has been good in the past, you have no clue what's going to happen right now. Or even like monitoring their health. Whereas you can absolutely use CDR for credit assessment. I love the idea of credit monitoring. Is so many banks or lenders, they actually don't really know the health of someone, and they probably only identify or label someone as having a problem at the 3rd rejected direct debit from their loan. By that time, it's probably too late, and and Adam's in trouble. He's probably super stressed. He has tons of bills, and he just it'd be just a terrible experience. Also, as a lender, I'd be like, all right, well, I'm closer to more like a write-off. I don't know if I can rectify the situation. The idea of being able to receive their CDR data, you get it in real time, and you can call the data really often. So it's great for actually monitoring the health of a loan. So business, they can look at the whole portfolio, and instead of realizing that it's too late, they could probably realize that, all right, Adam's business, or Adam is a consumer, he's not doing so well. So how can we be proactive and fix things before they get too dire? So it'd be a good experience for him. He knows that his lender actually cares about him, instead of just trying to get a margin out of him. Also, as a business, your portfolio health, and hopefully your defaults and your write-offs are, really decreased.
We've definitely read Adam like a book. Yes, yeah.
Yeah.
So
I have your data.
but I think the point on, I think with serviceability is quite important. Obviously, people coming out of COVID-19, banks, eventually have to start collecting on some of those deferrals. You're starting to look at lease payments. If you walk around the Sydney marketplace, there's still people with a lot of open leasing signs, et cetera. So real-time serviceability is going to be quite important. And we've been, again, having a few more discussions with some of the banks around that serviceability element and how do they get more, uplifting policy and procedures, for example, on that. And then also trying to get real-time data, trying to come up with tools that they can sort of assess that, because they want to be able to identify when they need to have that conversation with Adam, per se. So again, I think this is, in this COVID world, this is a real need in the banking market to be able to determine serviceability. Otherwise, we're going to get a big increase in sort of impaired loans, which I think people are trying to avoid, obviously. So.
Absolutely. So yeah, and those type of use cases would be like, as soon as the Big Four start to share their loan data, which actually in about like a week or so, that will, you can start to build for this right now.
Yep.
So, another one, which is definitely goes to, so go into your territory, the idea of identity verification. So when data holders share consumer data with data recipients, they have to share specific types. So they're generally referred to as data clusters. So that might be a customer data, account data, and transaction data. So the regulators can change like what's actually required to be shared, or ADIs or data holders can actually voluntarily share more data, and that can be free, that can be paid. There's lots of rules around that. But the idea of how can you make identity verification something that is not seamless and actually pretty expensive for the business and just a bit onerous for the consumer or business, how can you make it much, much smoother? So right now of course, if you're a recipient and you're obligated to identify someone, you can't rely on someone else's identification processes. So I'd still have to take your license, your passport number, Medicare, go do something with some VIX Verify or Green ID, something like that, and verify it. And then there's always processes, and it just takes a while, right? It's friction. It's so many reasons why businesses don't change accounts, because you're like, well, gosh, I have a trust structure. I'm not gonna send all that again. Like that's, so then looking at, so right now there's the AML-CTF Act of 2019 that really looks at changing liability. So ultimately, if you're, how can an organization rely on another organization's assessment? So if they were to share that assessment through open banking, instead of, say, Westpac sharing Adam's license number and details with the data recipient, it would be the idea of you just have like a tick of assuming that the data recipient likes Westpac's ID processes. You would just say, yes, we rely on that. You'd have a tick. There's no more sharing of extra data, documents, but just making it much smoother. So I think that that's a huge, huge opportunity, like for consumers, for businesses. So I've been thinking about how do you increase velocity of switching, just to better, more suitable products, and how do you decrease barriers? This is a huge one.
Adam, what do you think about this?
Look, yeah, I agree. Look, it is a large one. When you think about know your customer, it's the cornerstone of money, anti-money laundering. Should include the A. Sometimes I drop it.
Just money laundering.
You want to understand who the person is and what their intentions are with your product. Absolutely fundamental. So it'll be interesting to see how that legislation goes. I suspect it will definitely go through. It has to. But how it's practiced is another thing. So not only do you have to identify the customer, there needs to be an ongoing process of monitoring that customer. Sometimes, well, it should be anyway, underpinned by your understanding of who that customer is, what their transactions are like, history, etc. So there'll be a whole flow on, not just the identity, but the transactional history, source of income, potentially in some cases, the need for enhanced due diligence. Maybe the customer was onboarded and their status has changed, therefore requiring enhanced due diligence. How's that all passed on to the next bank or or financial institution, and how do they interpret that, and what processes do they need to put in place to deal with that, to concur with their obligations under the legislation. It'll be interesting.
Well, I think to me, this is the heart of the trust piece, because obviously in the press, there's been a lot of AML issues, there's OSTRAC issues, there's KYC issues, there's fintechs that are reg techs that, can know your customer and help clients focus on AML. But will we get to that point where Adam signed off and without having to send any additional information to Jill, other than I've done this process, is Jill going to be comfortable to make, a decision on her side? And so this is going to be, probably where we'll see if there's a duplication of effort, which obviously this is hopefully streamlining the process. Obviously the issue is going to be who's at fault, and so, this one's going to be one of those where, we obviously have to go through and see where there's some issues, and then obviously look at the legislation, how that's applied. So it's going to be an interesting one. Obviously it's very topical, and as we become more global, it's, we've got a lot of, we deal with a lot of broker dealers that got overseas customers. Obviously you've got US rules around FACTA, and they've got higher requirements in terms of tracking down from people from a tax perspective. So you can see that this one's going to be a very interesting, part of the CDR process. And it comes into a little bit about accreditation, because I guess if you're accredited, people are going to be relying on the fact that you've got the internal processes that people can rely upon that data. So this is going to be, I think, what's going to be evolving over the next year. Jill, do you have a view on that?
No, I couldn't agree with you more. I think that it's absolutely the balance between customer convenience and like just making sure that that all of the rules and laws are still really upheld. So I think that having that balance would be, it's going to be difficult, and it's going to be, a work in process, especially, when I go from a low risk assessment to a high one. Well, what about that? Yeah. But I think that just starting CDR, just sharing a lot of the data, that's really, really, really difficult. So if we can have ID, or relying on ID transfers like in the CDR framework, I think that would really increase uptake, but just make consumers' lives and businesses' lives much easier.
Look, I know, OSTRAC they're an exceedingly effective regulator. I think we've seen that from what's been coming out in the media, but too, they work very closely with the reg techs on issues such as this. I'm not privy to anything about open banking, but I can guarantee there's probably something going on in the background, and there's a solution being developed. So I think it's positive.
I guess one of the questions that came through that I saw on the polling questions around privacy, in terms of, I guess, there could be an element of concern by people just from a privacy perspective. And I guess both of your views in terms of, what would you say to the consumer that has sort of privacy concerns around CDR?
I would say that it is a closed ecosystem, that it is highly regulated, and there are high barriers to be a part of it. So the same way that you trust a new bank that has a new license, you trust it because APRA has really high standards, and that bank has to meet it and continue to meet it as well. So if you are engaging with a company in the CDR ecosystem, know that they have had to jump through a lot of hoops to be a part of it. So they've earned their place there. So whether it's customer experience, processes, like technical security, storage of your data, that's all been covered with a very, very fine tooth comb. So I'd say, just rely that the rules have been, like the rules are totally, we have the customers at the heart of it.
Yeah.
So I think that's what I would say.
Yeah, and I think, sorry, go ahead.
No, I was going to add, I'm probably a bit more pragmatic about these things. So if you're not doing anything wrong, what's the big deal? But yeah, and to your point, you make some very good points there too. I think, personally, I don't think there's particularly a big issue with who's getting the information. And if you can understand where that information is going to flow to, and it's giving you immense flexibility and ability to get products cheaper and more easily, then it's a reasonable trade-off. Just might be.
Yeah, I mean, if you coming back to COVID and the COVID-19 app, You almost had two parties of people that were ready to download it because it meant I could get back to life as normal. And then you got a lot of people that were thinking, I don't want people, sort of tracking where I am or what I'm doing. And obviously now you can see you got to scan yourself in anywhere. So if you're trying to hide from someone, you can't really anymore in any event. So I do think there's going to be an element of how people trust the process, but it is a concern. It links in a little bit with, data breaches and, big banks and people having too much information and what are they going to do with this? And I think, people don't want random calls from telemarketers because, Jill is from Buffalo and loves chicken wings, and all of a sudden, an American bistro opens up and, she's getting a call. So I think it's just, that balance of, the privacy element's quite important. And one more question before we get to the next polling piece is, I guess during COVID-19, KYC during COVID, there's been some changes in terms of identification. Do you think, in terms of the identification process, do you think that's going to continue sort of post-COVID as we move out of this pandemic?
Good question. The short answer is I don't really know. I mean, it's an evolving space. Yes, I mean, AUSTRAC were very quick to come into play when COVID hit and give some alternatives around flexible identification to allow people to still continue having some flexibility with their banking arrangements. So I think that was, kudos to AUSTRAC. I sound like the choir for AUSTRAC here, but I mean, look, they're very good and they did act very swiftly. And I suspect, any further changes will result in further amendments to what we're seeing presently.
Okay.
Yeah.
Okay. Maybe we'll go to our last polling question. Maddie will put it up on the screen. Which of these use cases do you think would offer the most benefit for the banking sector? And we've got the three, and we've got the other. And I guess if we get other as the big point, then we might be able to get sort of a viewpoint in terms of what those would be.
Could be 22 more.
Yeah. I guess, Jill, I'll just start to think about the next sort of question while we're waiting for the answer to come up. In terms of, you outlined a few different use cases that don't have regulatory approval. I guess, what's your sense in terms of how quick the regulations will free up these other opportunities that you've sort of outlined in your thought leadership piece?
Yeah, so I think that those two main things that are in transit right now, or like in progress right now, is like one, definitely the AML-CTF Act that's in Parliament. So I think that's that's obviously in progress. In Scott Farrell's December 2017 report, the review into open banking, that was actually one of his recommendations. So it was built with this in mind, just about being able to rely on someone else's AML assessment. I think that something else that is a really, really good indicator of what's happening is that it's the review into right access. So right access really means that, so read access is what's happening right now. That basically, data recipient, you receive information from a data holder, and you can kind of just look at it and analyze it, make predictions, create some insights, do whatever you want with it. Improve your processes. So that's really read access. The write access is being able to make or initiate updates. So that could be payments, which is generally payment agnostic, or even customer updates. So the idea that maybe I've changed my address, and instead of updating that, or even like my bank account details, so instead of updating it wherever someone sends me mail or has a direct debit, the idea of how can we update it in one place, and one accredited organization can update other organizations. So realistically, for a customer, well, let's decrease life admin. Even the idea of like updating your name. It's when you change your last name, it's actually super hard to update lots of different organizations because they have different processes. So yeah, so right access, that is, so recommendations or the review into that should be published by the end of the year. So we talked to Scott about 4 to 6 weeks ago, and they were starting to like finalize their recommendations. So that is well happening. So
yeah, I mean, the change in address would be quite interesting. So I've used my mother-in-law's Bondi Beach address for 20 years, and I've moved multiple different places, Vietnam, back to the US. And part of the challenge is, to your point, being able to change, at one point in time to update all mailing records. So again, these are just some examples of how life could change to the positive. So coming back to the polling result, pretty well split. In terms of switching as a service and the credit monitoring for banking sector. So I think hopefully for the listeners of the webinar, you can start to see some real practical examples of what's going to be impacting the FS sector. And obviously, hopefully, if you're on the receiving end of the data, there's going to be a lot of different opportunities as well. Let me just, maybe if you talk a little bit about what you're doing, I guess, with customers now in terms of helping them get ready for CDR, and just a little bit about maybe the time it takes to be ready, because obviously, we're probably thinking there's going to be a greater increase that people want to be into the ecosystem. So what advice would you give to people out there?
Absolutely. So I get this question all the time it's one thing about, I feel like this first step is like, about CDR, the different opportunities. And then people think of, right, this is my use case. This is what's good for my ROI. I have a business case for this. This is what it looks like. And then there's actually being accredited. So what does that path really look like? And how long does it take? So I would just say, it depends how ready you are. So there's a streamlined application for an ADI, as opposed to if you're not an ADI. So it's definitely faster if you have an ADI license. But overall, the requirements are still the same of what you really have to do. So I'd like to divide them into like 3 different categories. So customer readiness, business readiness, and technical readiness. So the customer readiness part of it, that is, well, one, you have to build your customer value proposition. What are you going to do with that? It might be a new data source that feeds into something existing that you have, an existing process, or it can be like, right, I'm going to create this whole new thing. Whatever you want to do, we're seeing both sides of it. And then you have to have a customer consent dashboard. So this is something that in your web portal or your online banking, whatever you have, it's a place for customers to grant consent, manage, view, and like withdraw consent. So this is something that every data holder and data recipient has to have. So because the customer is at the core of it, you have to, consumers have to be able to go in and be like, right, I'm sharing my data with so-and-so, but it even says, this is the purpose, this is how long you're sharing, this is what they're doing with it. And you could say, right, I'm sharing with a loan broker, and do you know what, I only want to share it with you for a month, because once I get my loan assessment, I'm just going to withdraw access. So you can't do that anymore. So that's the customer part of it. So that's the just awareness and management for the customer. The business readiness is you have to go through an application, and as part of that, you have to get processes and policies ready. So that might be, it's a new CDR policy. You would, well, depending on whether you have them or you just need to update it, there's updates to your internal and your external dispute resolution policy. There's your fit and proper policy. And some of the processes associated with that. You have to ultimately get, an ASAE 3150 audit, which it's like a pre-audit check, and then they do the audit. That generally takes anywhere from 1 to 3 months, depending on how ready you are and how fast you really move. And then you have to have an insurance in place, but there's specific checklists, and if you really focus on it, it shouldn't be too much effort really. And then there's the technical side of it. So there's 2 options with that. You can take 9 to 12 months to build all of your technical and security requirements for this, and then be accredited. And then you have to have a program of work, teams, and then consistently maintain that, because the standards, rules, and guidelines constantly change. So right now there's a 3-year roadmap, and it's just gonna, it will be a program of work. So you can do that, which we wouldn't recommend. Or you can use a CDR platform like Adatree. We have everything that you need all done. We have an optional consent dashboard that you can white label if you want, or build your own consent dashboard if your CX is really important to you. and then we have everything that you need technically. We deploy it in your environment and have it configured, and it takes about a day. So go from 12 months to a day, and then you save at least 90% of the cost. So our analogy is licensing PowerPoint instead of building it yourself.
Yep. Okay.
Yeah.
And I think, you kind of touched on the accreditation process, and that's probably obviously where, here at BDO, we kind of can get involved in terms of looking at, sort of policy documents. Obviously for our auto clients, we'd probably be involved in providing the assurance, sort of piece of work. Similar to what we normally do with other banks in terms of GS007 internal control reports, this is, something very similar, which then, customers can rely upon the client that we're doing that piece of work for. But probably the first point is just, looking at the internal policies and procedures. So a bit of thinking before you jump into the assurance, sort of piece of work. So, we've worked on a sort of a checklist, and this, the team will probably send that out with the webinar notes, but just sort of a relatively straightforward 2-page document that sort of helps clients sort of assess readiness. And obviously the technology piece is sort of a key part, obviously, of that particular part of the roadmap. But I think it's good to think holistically, because I think when you're ready to become accredited, obviously you want the technology solution, but you need the controls, processes, and the assurance ready to go. And I guess, Adam, from your perspective, what's your view in terms of, how clients can get ready if they're looking to adopt CDR?
I think, and this is a constant message, and I'll give an example which will be very relevant as to where this can go really wrong. First thing I need to ask is, do I understand my financial crime risk? It's a new product. It's moving rapidly. There's a tendency to get it out there because it's going to generate income and it's going to assist our customers, but we don't understand the risks, in particular the financial crime risks. So that's the first question. Obviously, the answer to that question is underpinned by a robust risk assessment process. So you really need to get in and understand what your risks are in application to that particular new application.
Yep.
The other one is, do I have adequate controls and procedures in place, a governance framework to deal with or mitigate the risks that I identify and understand? Very, very important question. And I'll give the example of, it's a money laundering example, Westpac. I didn't come here to name names, and it's really a good example, however, to show where this can go horribly wrong. Back in the day, so several years ago, they decided not to monitor a product called LightPay. It was the channel going into the Philippines, and we all know what happened with that. $1.3 billion fine to 23 odd million breaches. That one decision has resulted in not only the regulatory fallout, reputation fallout, but there's class actions coming, and this is the big one we've never seen before. The reinsurance market has now said that they have absolutely no faith in the board or executives at Westpac, and they're not insurable. So insurance has been declined. This is where it can go really wrong. So, I can see similar situation here if the processes aren't followed and the risks aren't understood and the governance system put in place, the ramifications are huge. And then lastly, the regulator and the board. Again, can you demonstrate to the regulator and the board that you understand your risks, like I said, and that you have the adequate procedures in place? Those three questions, I think business need to really seriously focus on.
Well, I think the regulator is quite important. I mean, no one likes to get an email. Whenever I get an email from a regulator, I'm hoping that they're not asking a very difficult question. So I think, when as companies look to adopt CDR, I think it makes sense to stay sort of on top of the regulatory requirements. And I think this is where, again, Joe, you kind of mentioned it's been a bit of a slow go because there's a bit of a high hurdle. And I think it's just make sure companies go through the process to make sure they're ready, that they can answer sort of regulatory questions when they do come up. Because obviously there will be questions once people start to apply CDR. I'm just mindful of the time. So I guess in terms of final thoughts from the two of you, I guess, it's, CDR, I think, is, a bit of a balance between customer experience and the sharing of data. and there's an element of trust in the sector that needs to be required for this to work. I guess what kind of takeaways would you give to the people that are listening to this webinar in terms of CDR and next steps?
I'd say I would personally say, like, just look at the business opportunities for it as well. I was talking to one bank and they said, you know what, innovation isn't part of our board strategy right now. So I don't know about CDR. Like, this actually just isn't like innovation. This is a tool with that is really powerful, and it's going to be expected from your consumers for you to improve so many existing processes for consumers, but just like so they can, it'll like improve processes, but ultimately customers are going to expect more. You're going to see companies, whether it's in financial services or outside of it, they're going to go from a product company to an insights company to a services company. I think that this is what it really unlocks. So you can absolutely take the wait and see point of view to it, or you could just be like, well, my competitors are working on this right now. So what can I do? And how can this actually be of savings? How can this have a huge ROI for my business in terms of acquisition or decreasing costs? I would just recommend jump straight in, just because there's a fair amount of companies that are working on it right now, and it's not just innovation, it's really creating value for your company.
Yeah, I think that's probably an important point. Adam, you can think about your last thoughts in a second there, but I think it's, people are doing this. So, if a company is out there thinking we're not going to seriously consider open banking and the impacts of the future of our business, I think that's probably a mistake that they're making. My father used to work for Kodak. They made a fateful decision in the 1980s in terms of thinking digital was not going to be the answer. And of course, by the time they realized that that was not in fact the case, they were in trouble. So I think this is really an opportunity for people to be looking about how this is going to impact the change of their business in the foreseeable future. So it's a great opportunity, but I think it's, people have to be thinking about it at the board level. Adam, what are your final thoughts?
Yeah, I think it's exciting. It really is. It's a good opportunity, but too, it's a good opportunity for criminals. They're very adept at
Criminals. Yeah.
Criminals, yeah. And I use the term bluntly. That's what they are. They typically identify a new product and they'll exploit it, and they'll know about the vulnerabilities in that product before the compliance teams will know about it. So I guess my message is don't take any shortcuts with this. I think the virtues of it are fantastic as well. Don't take shortcuts. Understand the risks. Put processes in place. And yeah, I agree. Give it a go.
Okay. Well, thank you very much. This brings us to the end of our discussion. Thank you to Jill and Adam for your valued insights. I'm sure everyone on the call found that very, very useful. You'll see on the screen details of our next webinars. And our next session is in November, where we're going to be unpacking the federal budget for fintechs. And then that's with Michael Pazin of Piper Altman. And then we're going to be following that up in December with a bit of a capital markets debrief. So we're going to be having Sebastian Stevens from our corporate finance team, as well as a member of ASX participating in that fintech. So it's more of a look back in 2020 and a look forward into 2021 for the capital markets. Then we're going to take a break, and then we're going to be coming up with our calendar for 2021. And we're going to be looking into deeper dives in certain subsectors of fintech, and we're going to be starting that out with RegTech and payments. The details of this webinar will be shared with you in our follow-up email. If you missed our first webinars, the team's adding a link so you can go back and watch the first two that we've done. And appreciate if you can take some time to fill out the survey, and hope everyone has a great Friday. Thank you very much.
Thank you.
Thanks, Em.